All right, so what do you think are the factors that have led us up to where we are today?
Well, that's a good question. All right. The factors are pretty blunt and simple. Um, to start, I'll start with the federal government. The federal government was not the sole responsibility, but they were the direct responsibility of the '08 crisis, partially the '01 crisis, and then especially what I like to call the everything crisis, which has been led up to factors including the federal government. Um, so I'll start from the beginning. In '01, we saw, in Sheriff Alan Greenspan, he was Alan Greenspan was the Federal Reserve chairman at the time. And he's also best known for a famous phrase called irrational exuberance. And this irrational exuberance very well justified the '01's parabolic move to the upside for no intrinsically valued reason. The stock market just saw its own short-term speculative revolution in the technology sector, and any name with a .com just blasted off to new ultra heights. And relative to their valuation, their free cash flow valuation, they were um, not even near par as to what the market was valuing them. So as a result, the stock market bubble crashed. It was popped. And Alan Greenspan, this is true. Alan Greenspan is the only federal chairman that admitted in testimony to Congress subcommittees, he was the only one that admitted that he made a mistake.
Wow.
Bernanke didn't mention that he made a mistake. Volcker didn't mention, Yellen didn't, Powell didn't. None of these chairmen have ever admitted to a mistake other than Alan Greenspan. And that mistake is what has been adopted by the Federal Reserve as monetary policy. Um, so quantitative easing and tightening. Tightening ensures, it encourages investment, and not investment, and higher interest rates encourage savings, because there's just a higher interest rate at play rather than a lower interest rate where everything is easier and the entry to barrier to buy something is much, much more easy with larger quantities. And that's exactly what the Fed was doing. They were oversupplying the market, not just the treasury market. They weren't just buying treasuries. They're, especially now, if you're talking about now, um, the Fed has been buying up all asset classes, high yielding debt, even so far as corporate debt. Eventually, I think it'll be actual equities, stocks they'll be buying, because that is how foolish the Fed is. There's no more capital up front. There's no
Unbelievable.
more liquidity to support, what the Fed is trying to arch here. And what they're doing ever since '01, ever since Greenspan, and even before that, I would say, this humongous bubble that has just started deflating now, that has just been popped because of coronavirus now, it's a result of what the Federal Reserve has been doing, trying to keep interest rates so low. But one problem is they haven't been able to keep inflation over 2%, which you would think is easy because low interest rates inevitably lead to higher inflation because there's just so much buying activity at these low rates. But the problem is our trade deficits. Um, since 2011, we saw our trade deficit increase 500% to 2016, 500%, not even including the past 4 years. Past 4 years, we crossed $1 trillion, plus the current 7 trillion, potentially 10 plus trillion dollars. That's a record number on the Fed's balance sheet. It's entirely exploded because the Fed is putting all of their ammunition. They can't put much of any more ammunition because they already are at 0%.
That's crazy.
So there's no more ammunition left. Next thing is sovereign wealth. Sovereign debt is at all-time highs as well because we're borrowing from so many nations while simultaneously using that money to reinvest in what we call as the federal government liquid, um, the liquid market or the treasury market. And even that is volatile. That's more volatile than the dollar is now. And that's the only reason why the dollar is remaining at its highs relative to other currencies. Because frankly, if we didn't have the US dollar, no other country in the world would be backed by paper money. They'd still be backed by gold. The only reason why all of these countries actually converted to paper money or fiat money is because the US converted in 71. That's the only reason. Otherwise, everybody would be backed by gold. But that's just not the case now. And the dollar will collapse. The dollar will collapse as a result of this humongous accumulation of debt that we've seen over the past 2 or so decades by the federal government. Um, so in a broad aspect, Ethan, that's my macro kind of answer to what has led up to this everything crisis.
Interesting. Now, before we get into what you think, well, first thing that came into my mind, I want to ask you this. Going into the future, because of all this debt that's been amassing for 20 so years, do you think that other countries' investment opportunities in regards to investing in companies and stocks, equities, are going to surpass the United States? Like in regards to like maybe, the S&P 500 won't be the best index to invest in anymore because, the Asian markets are kicking ass, or, Europe is cranking out. I don't know. I mean, in the long-term future, not long term, but definitely not short term. I mean, what are your thoughts on that? You still think that with the amount of debt the United States has accrued, do you think that they're still going to be the home of the best investment opportunity in the world?
That's a great question. I think that, yes, I think the United States, although it's a developed market, it's a developed nation. It's not developing, it's not emerging, it's developed. Although some might argue that with our current technological revolution, and by the way, just to branch off for a second, that's why I don't invest in companies like Apple, like what everybody knows. Everybody knew Yahoo, and look what happened to them before Google was a thing. And now Yahoo's a subcategory of Google. So it's a very tremendous thing when everybody focuses. I don't focus on stocks that are so well known where their floats are so high, so the variance to which their price action is minimal when there's an upside or a bear market. But the reason is because why not go for companies that are not known, that are not in tap to the market? So when there is PR, when there is good news, that variance is much, much more rewarding. But to answer that question, um, what do you say the long term?
Well, I think to rephrase it in a better way, I mean, do you think that 10, 15 years down the road, this amount of debt we're accruing in our nation is going to impact the economic activity to such a degree that, the United States corporations aren't the best place to invest your money anymore
Yeah.
relative to the world?
Yeah, so I definitely think there are much better countries to invest in right now. Just for example, okay, India, not more than 2%, not more than 2% of India invests in the stock market. Okay, they don't even, not more than 2% even invest in their stock market. So you can imagine, but still they're an emerging market that's a much better investment opportunities in, individual companies in terms of that relative to America. There's much better opportunities in South Korea and even China. There's a tremendous amount in Taiwan and Singapore, Hong Kong. There's a lot of Eastern society that is much better opportunity than the United States. And I say that because, especially if, for example, you're a very patriotic person, you want to move to somewhere maybe warm, retire there, and but you have such a libertarianist view of how the government taxes you, how every loan is subsidized, all these subsidized guaranteed loans. It's tremendous. It's very impactful for a human being to live. If you're in the top 1%, they're taxing you at over 50%. They're taking half of your money, which is tremendous. It should be an equivalent of the same tax for every single sole individual, because the country's not going to get rich by making the rich get poorer. or making the poorer get richer. It's going to get richer by productivity and the factories that we make in the United States.
Of course.
So I think uh, there's definitely better opportunity outside of the United States. U.S. is still, of course, the most prestigious, stock market system
Yeah.
in the world, absolutely, and the liquidity is the most out of any other country. So it does have its benefits. But like I said before, in terms of investing in individual stocks, um,
There's better out.
yeah, um,
Yeah, I mean, absolutely. The emerging markets. I mean, you just got to find the right ones. But it's the same deal with finding the stocks in the U.S. stock market. You got to find the right ones.
yeah,
So, you know, they're no easy. They're not easy to come by. So, got to do your due diligence. But
yeah.
taking it back to the U.S. now, do you think that, well, obviously with what's been going on with coronavirus, 100% the debt is accruing even more. Now, do you think that this virus could get so out of hand economically, or let me rephrase that. Do you think that the virus can hit the economy so hard that it's going to make this trade deficit, I mean, not the debt deficit, even more substantial than it already is, and do that in such a short term at such a high growth rate compared to what's been going on in the past 20 years, you could say?
Yeah, I think it's already priced in. I think, well, not completely, but I think just that fact is in fact priced in. I mean, we've seen, just the fact that the stock market dropped over 30% in less than 3 weeks, 2.5 weeks. That shows you what we've been doing wrong. That shows you how untrustful people are, and institutions and people's
Yes,
pensions are. I think the prolonged accumulation of this debt, along with the major spikes in major economic data, for example, record numbers and loss of auto sales, record number in retail sales. We just saw a record number of almost 9% loss in retail sales, and so many other economic factors that, really are countless to what, the federal government has done as a result of all this data. By the way, if it weren't for coronavirus, we'd still have this situation. It was
absolutely.
just a pin that made the bubble pop, and it happened to be the most extreme pin of all.
Yes.
So we
Now,
got the depth here.
yeah, the question is really though, is how deep is this pin gonna go?
Well, I
You
don't know when
know
the
what I mean?
bottom is, but I think what we're going to see is a collapse in the dollar, along with a humongous money supply. We have almost $15 trillion in money supply, but where's the demand? The demand for the dollar is sovereign, and that's why again we're seeing the dollar just get compounded to very very dangerous levels. Once we see that collapse, interest rates will be forced to go up. Right?
Absolutely.
We're going to transition from a short-term deflationary, because so much short-term speculation has become tremendously dependent on very sole factors and idiosyncratic factors. But when that second phase of the recession, global recession, kicks in, fun fact: 90% of our fish, of America's fish, 90% of America's fish is imported.
Come
So
on.
we have to buy. So what's going to happen when there's no fish? We're screwed. We'll go starving. And there's many case examples like that,
Well,
uh, where we're systematically going to be affected by every simultaneous effect in each economic, representation of the economy.
we're too
Uh,
spread thin and relying on other countries. You know what I mean? In regards to trade, like you just said, we get 90% of our fish from other countries.
yeah,
We get 90% of most things from other places, and especially after a pandemic like this, I mean, imagine if all of our stuff came from America. I mean, we'd be cranking along. We would have just
yeah.
closed. We would have probably closed the borders, and you know, well,
Yeah, I mean that
I mean,
goes back to the democratic socialists, the radical left. They think that, given their recent socialistic views, they think, having no borders is just fine. They think having no borders is fine because this is the land of the free, but not when there's a virus circulating the entire globe and affecting every country in it.
No, you can't put people's lives at risk like that. Not at all. But yeah, I mean, don't even get me started about the socialists that are going around the country at the
But
moment. But
even in modern day, I mean, socialism can easily create a subcategory for fascism. It could go to very, very discrete things and topics,
it's just
and
not what we need.
yeah, it's not what we need. Conservatism is certainly an entire, they've leveled off a lot, but they're entirely right for the most part because they're so obedient, they're so expressive on how we should have taxes lowered. Period. There's no other equivalent to what we need, but the the way to think about it is because the government, this is why we need less government intervention. We need limited government because um, the government is poised. Well, I'll start with this. Corporations are not wired to perform in an economic environment like we're seeing now where everything's shut down. Neither is the federal government. They're not wired to operate like this. So what do? They revert to every other mistake they've done in the past. And they're just continuing by bailing out all of these businesses that don't deserve to be bailed out. They should be left in the free market to fail
Yeah,
because they're a business. It's a free market. It's capitalism. So if, for that's just one example. The stimulus packages, one stimulus after the other announcement. It's tremendous how much money is being wasted. I saw even what was the company? I think it was Walmart that rejected a $10 million loan because it was meant to be transferred to small businesses, and clearly Walmart's not a small business.
yeah.
But
I think
he's being misallocated by the
Shake
government.
Shack
Not
did that.
surprising. Yeah, these additional
10
credit
million bucks
facilities.
back.
What?
They gave 10 million bucks back, Shake Shack.
Yeah.
Yeah, because they weren't a small business.
No, no, not Shake Shack.
No, I
Well,
know. Yeah, another company though. Shake Shack did it too.
oh, really?
I think I read it this morning. They gave back 10 million bucks that they got for a loan, but
Yeah.
not for them.
It's just not for them. And, we ran out of what happened to that first stimulus? It ran out like this. Not surprising because there's so many people out of jobs. There's over 20 million people in jobless claim territory. Um,
No,
that,
it's not to interrupt you, but with the job list now that you mentioned, I mean, if they're printing money left and right and inflation is going to kick up, what's your thoughts on that? I mean, people's money is going to be less valuable at the rate that they're printing money to fix stuff, and especially with people being out of jobs. I mean,
yeah, I mean,
their
they're printing.
savings are just going to get diminished.
Yeah, they're printing fake money, and it's not truthful money. It's not money that's going to hold as wealth. So this paper money, this fake money, is being distributed to businesses when it should be bailing out the taxpayer. Because when the government bails out businesses, that's at the cost of the taxpayer through inflation. And even though we've been through this circulation of QE, most recently unlimited QE, it's surprising still that we're still not over 2% inflation. But it shouldn't be a surprise at all. It's because we've it comes down to as simple as these terms. Um, why be involved in a country that can't pay back its debt? Because it has to pay it back at some point. It's not just free money. So it's
Year,
money that has to be paid back, and that's in the many tens of almost hundreds of trillions of dollars. Um, we're not even close to sophisticatedly. We're not close to um, whatever that word is to even prevent such a drastic error, because our federal government is foolish because they've been easing their way out of this whole time. What they should have done was raise interest rates and let the market fail for the short term, and then let everything settle out for the better of prosperity, because
yeah,
that's when businesses will have the actual incentive to save, and they'll be able to put people back to work no problem at a very low cost. Because of the federal government, it's extremely costly to hire people, extremely costly.
of course.
If you're involved in investment management, for example, it costs, and if you're hiring someone in the US, it costs somebody as much as 500,000 to $1 million in terms of all these guaranteed loans that you're taking to hire these people. And not to mention, you have to pay back these loans. for small businesses, like restaurants, hair salons, and all that, obviously they're the most affected. They're the most directly affected because, you know, I did some math. Let's take a $6 million a year business in the restaurant. A good size business that gets flow many customers a day. So that comes out to 500,000 a month. So 500,000 he's netting in revenue a month. But I also did a little research, and I found out the average, and that's 30%. A restaurant's business is 30% in expenses to their revenues. So now they're keeping 30% less than that 500, and that's not to include. So now let's take into account the coronavirus. This is already a low margin business, right? Hair salons, and
Yeah.
because there's a price to pay for what you get, um, a pretty tight one. So once they get these loans, what they're forgetting is, yeah, they're going to be eased for now, but they have to pay back the loans. They have to pay back the loans, and with interest. So it's not like they're gonna, what they should be doing is taking that money, go on a 1 year vacation, and close down your business, go on a 1 year vacation, maybe 2 years, and use the money to reopen the business, because you're much better doing that. You're much better off doing that than just trying to bear with the loading amount of debt, accumulating debt that you will see come shoot right back at you. You might as well just shut down operations, not not make any more expenses. You should hold on to those expenses for reopening a brand new business, when
Absolutely.
prices are low, to continue operating in an environment that may even prolong, might come back the virus in wintertime. And when it does, I believe the virus will stick with us for a while. And I don't think there's any sufficient way. The only thing we need, which obviously is the hardest part, is the testing. I know New Jersey just started on antibody testing, so that's a great start. But we're nowhere near to what Trump just used the Defense Act um, to produce record swab numbers, one for each and every American many times over. That's good and all, but we need insurance that that people can take these tests before going into work, and how everything is going to work. Nobody knows what's going to work and what isn't. So there's a lot of sensitivity at risk here, and there's a lot of analysis that needs to be done. Um, it's hard for anybody to say what will happen, but um, if the government, which they will, continues QE, continues bailing out businesses that aren't even subsidized themselves, they might as well. I mean, what happened with Fannie Mae and Freddie Mac in '08, they were forcing to conservatorship, which I didn't agree with much, because they should have been sole operators of the mortgage market, but they weren't. They were controlled by the government, and they wonder why they failed. They completely collapsed because the government backed them. All this liquidity. So it shouldn't be, same with SHA. It should not be a surprise, especially looking back at it. And it's happening at the same um, point in time right now, at its highest possible, at a record number. We're seeing it with banks. I mean, we just raised our cap limit, our cap reserve limit for banks. So the amount of liabilities they could retain is much more, because there's more federal oriented liquidity in the market that they can obtain like that.
Yeah.
Um, but they're not obviously concerned with the long-term aspect of when to have, they have to pay back that debt. They can't hold it off forever. And that bubble is slowly deflating now. We'll soon see a collapse in the dollar. I believe we'll retest the lows, of our current crisis. I very much believe it, because we're very much short. We're very much oriented on short-term speculation. The only thing people are focused on besides oil is, and that's even a sub factor, is when will the economy reopen? And people obviously right now seem to have very, um, it's come across from the chance of uncertainty, but more on the probability side of relatively soon the economy should reopen.
Yeah, only time will tell, and I guess we'll see what happens. And hopefully everything works out for the best in regards to you know the way we handle everything.
Yeah, I hope so. But knowing the federal government, they'll just sink us all into the water they're coming with this time. Um,
We'll see how good they swim.
yeah, we'll see how good they swim. Um, um, yeah, so I think it's just really a matter of, um, I mean, what can an investor do to not only invest but to you know um, to save themselves from systemic risk. The risk of our economic system failing. Personally, I think eventually soon we will go back to the gold standard, um, because we this just has not worked out. The
Can't just
paper money
print
is
money
not.
like crazy.
Yeah, I mean, I'd much rather be backed by gold, which is a much more stable um, um, system of exchange than the dollar, because the dollar moves in value a whole lot more than gold ever did. And gold has been nothing but the long-term stock market in a 200-year view. It's just been a slope to the upside. So if you were to hold gold at when it opened like $40 an ounce, it's almost at 1800. So in that 50-year period, that's quite a bit of money with however ounces of gold you had,
Yeah,
relative to holding on to the dollar where you're break even or in major debt. Um,
yeah.
I don't know anybody that's rich off holding a dollar. I don't know anybody that's rich off carrying interest from a bank by holding those dollars in a bank. I don't know one single person that's become wealthy off the federal government, which is
Well,
their responsibility to distribute equal wealth opportunities to the citizens of the United States, and they
too,
have not been completing that.
too much inflation. You know, they
Yeah,
offer they offer you 1%, but they're printing money at 2% to pay you.
yeah. I mean, people should have seen this coming. I mean, you know, the recession was easily interpreted just from the fact that we had sluggish economic data back in like 2019. Sluggish economic data, along with a very much overpriced market, a stock market. Just that divergence right there confirms that inflation and that stupidity, that irrational exuberance that Greenspan talked about, emphasized a lot. um, and it's come back and it'll continue to come back, because the federal government should be limited. The corporations should be the ones that operate this market, not the federal government. That's just not how it worked in history, and that's not how this was adopted. This system of trade was adopted because I mean, since 1914 we had we had this kind of system. In 1914, the only reason that happened was because of J. Pierpont Morgan. J.P. Morgan. I mean, he's basically the Napoleon Hill of of the 19th century. He proved to everybody that you could become a billionaire. He became a billionaire. Um, well, excuse me, he actually was worth like $80 million, or excuse me, he was worth $7 million, 7 million bucks, but in today's terms, obviously, is much more. But
Yeah.
he was able to buy. He had a very way about him. He basically just had a very good insight for business and negotiation. And what he did was, while his dad was pretty influential in the political system, um, J.P. Morgan himself, continuously since the age of 10 or even less. He went off to Europe and he focused on relationships with European bankers, and then they went back to the United States, they went back to New York, and he set up all these different thrift businesses that eventually seeked investment opportunity. He then bought Carnegie Steel. He bought Carnegie Steel. J.P. Morgan bought Carnegie Steel. But then, guess what? President Hoover came in and wanted demand. He was monopolizing because there was an antitrust situation. Um, all right, and there was an antitrust situation that that kind of forced J.P. Morgan to close down Carnegie after spending $500 million on it. Um, and there was no, so he literally confronted Hoover, and he negotiated in his eye that, if you want this country not to collapse, you'll give me back Carnegie and give me even more money to work on industry, to work on making more steel and building railroads and doing all these productive things. Um, that was the prosperous moment of America for that reason, because corporations were in control. And
Yeah,
we've never had a system like that since.
we need it, quite honestly.
Yeah,
We,
we need.
you know, the corporate, I mean, I don't know. I mean, the corporation should be in control of the free market, not the government, like you're saying, or like you have said in the past as well. Um, I don't know. You think that day will ever come
Which day?
where we see that the corporations run the show, not the government? You know?
Well, I am a realist, so I'm gonna have to say that no, I don't think that'll become a reality, because libertarianism is a very unpopular kind of ideology to obtain, because that hasn't happened in 200 years. Um,
Yeah,
but I mean, that's the only system that has worked, the free market system. And if we collide free market with the federal government, as we've seen continuously through modern time, it doesn't work. Period. It doesn't work.
yeah. There's too much conflict.
Yeah.
One leans too much on the other. The corporations can't bail out. The government can't bail out the corporations, and the corporations can't bail out the government. So what
Yeah.
happens? Everything
Exactly.
collapses.
Yeah. What happens is we collapse, and it's going to be hard to get out of this rut, because we haven't really faced. I'm going to emphasize again. I've told you before, but since '08, we've had the weakest economic recovery in history, even more so than World War II. So it's
It's gonna be weak this time through.
yeah, it's not. We're gonna have to deal with it. There's nothing we could do to prevent it, because the government has already bought so much into this market. Um, right? The Fed's balance sheet is now 30% of GDP. I think soon it'll be 50% of GDP,
Yeah.
very soon. Um,
Yeah, I
uh,
mean, let me ask you this: how high you think they'll let inflation go at the rate they're going?
well, I think it's possible to see a form of hyperinflation. So, with that being said, definitely not in the short term, but in the long term, we could see as high as 4 to 6% inflation,
Jeez.
maybe even the double teens if we hit a depression level, and other uh, productivity data. But if that's true, then there's going to be people going hungry, and there's people going to have to. There's just going to be a whole lot of people homeless. Um,
It's gonna be a lot different.
yeah, so we're set up to fail even more now, because right, all the mortgage associations are under conservatorship after the '08 crisis, so the government is in the taxpayers' hands, and all they're going to do is just give them more bailout money, that's just printed, newly printed money that means absolutely nothing, and they expect these people to pay it back over time, um, along with what they borrowed with interest. And, it's kind of like a teaser rate back in '08. If we didn't see, all these brokers, and they knew it too, give out these little tiny rates at 1 to 2% for the first 2 years typically. And then after such, for the next 5 or how many years the mortgage is, it's a much staggering higher rate, and that's a surprise to these home buyers, these home holders, and and many of them defaulted. Many of their mortgages defaulted because of that, under subprime, and this is the same kind of situation, just on a different um, uh, relationship.
Yeah, absolutely. Same.
This is a consumer crisis. The consumer, and it's a financial crisis.
It's
Uh,
everything. And a pandemic. Throw that on top.
yeah, yeah. I mean, even once we're done with the pandemic, it's really just the beginning to this. What I think will be a depression, because there's going to be a lot to deal with. There's going to be a whole lot to deal with.
Yes, I couldn't agree with you more. I think that it has just begun. Problems have just begun. I think that the coronavirus wasn't even the biggest issue we're about to face. Um, but let's hope that it's not as bad as we. I don't know. I don't know what's gonna happen.
I don't know either, but I'm sure we'll find out soon, right?
Absolutely, absolutely. Yeah,
Um,
only time will tell.
yeah, only time will tell.